Good morning, everyone. Scott Maybor here with your Medicare Missive from the pond for Thursday, the 18th of July. Hope you are doing well. Gorgeous morning before the smoke comes back. Hope you're having a wonderful day. A couple things just wanted to touch base on. Let's see, I met with a family yesterday, or a couple yesterday, at their home, a couple towns over from me, and it brought up a couple interesting points that I just wanted to mention because it may apply to you as well. He is a retired union guy. The union has kept him on the health insurance until they qualify for Medicare. He's turning 65 in October. She's turning 65 in September, but because her birthday is September 1st, she's actually eligible for coverage August 1st. So the rule is if your birthday is on the 1st of the month, instead of your coverage starting the month of your birth, in this case September 1st, because her birthday is September 1st, her effective date is August 1st. That's very important because one, we have about 2 weeks left in the month. Two, she loses the union coverage as soon as she's eligible for Medicare, and they believe that is black and white. She's eligible for Medicare a month earlier than they anticipated, so they're a little bit late in their planning. So be aware of that. It's a little, probably not a terribly common situation, but because she is eligible a month early, she's losing her employer or union-based health coverage a month early. Two, we talked about her grandfather and his need for home health care. They were paying around $4,000 a week, I believe she said, a week to have full-time live-in care at the house to help keep her grandfather home. We were talking about, their concerns and their needs. They've got the house almost paid off. They have some cash, but they'd really rather not use it. And they don't want to go to a nursing home or an assisted living facility. They'd rather stay home, but the house has a lot of steps. Is that practical? Is that feasible? Having a long-term care policy is in some ways the permission to stay at home policy. You may not be able to stay at home without modifications. You may not be able to stay home without an aide coming at least a couple days a week to assist with bathing or some other need. Maybe full-time, 24 hours a day, 7 days a week, maybe not. But by having a long-term care policy, I will tell you unequivocally, it is much easier to spend a carrier's money when they're sending you a check when you're on claim than it is to spend your own money. And what I mean by that is if you have $1 million in the bank and you're writing a check for 20 grand a month, that's painful. And depending on where the money is, you have to take out more than 20 because they're going to take taxes out of that. And then you got to do market timing. So it's complex. If you go on claim because you have a ADL issue, activities of daily living, dressing, feeding, toileting, bed, transferring, those are all the things that you would qualify. If you can't do two of them, you'd qualify for a long-term care benefit. And by qualifying, they're going to start sending you money. Depends on the policy how that works, but essentially they're going to send you money, and I will tell you that it is easier to spend their money, especially after giving them premium dollars, than it is to spend your money and see it come out of your account little by little. So that's another issue that came up. We're talking about long-term care. They also have a couple old life insurance policies that they handed me that I have to take a look at. If you have old life insurance policies that you don't need that benefit, maybe you bought them when the kids were young and the mortgage was big and you don't need that money anymore, but you're still paying the premium, you may be able to use that policy for a viatical settlement, meaning you're going to retain some death benefit. Let's say you have $1 million policy or a $100,000 policy and you just want 20 grand for a funeral or 100,000 for whatever. You can lower the amount to that. They'll give you cash for the policy and you no longer pay any premiums. They now own the policy, they pay the premium, you have a death benefit. It's a great way to get rid of unneeded life insurance that you're paying for. They have a term policy. I suspect it renewed, but it renewed at 10 times the rate, so they're now close to $1,000 a month. They don't want the policy, they don't need the policy at that price. We're going to see what we can do with that. And then, of course, just picking the Medicare. The one final thing is she has a cleaning business, and so she qualifies for that MSA program I've mentioned. We may do an MSA program. She can deduct the premiums and then use the money in the account for one, dental, because he does need some dental work, and two, paying the LTC premium, the long-term care insurance premium. So a lot of moving parts, a lot of things that people can consider. Some of them may apply to you, some of them don't, but just could be some valuable information. Let me know if you have any questions. Let me know if you have any thoughts. Thank you for watching. Please share with your friends and family, and have a wonderful day.